Well, good morning or good afternoon, depending on what part of the country you are calling in from. My name is Ginger Bell, and I want to welcome you to the Finance of America Wholesale Mortgage to Extend webinar, and we'll be sharing with you today information today about the 2X Extend simultaneous second mortgage. And as you're getting logged in today, I want to go through some housekeeping information for you. First of all, you will be able to see my screen. I'll be forwarding the slides for you, and so you can access that information there. And if you are listening on your computer, you can just listen there. If you want to call in, you can call in on the phone number that is listed on your email and just call in from your phone. You will need to be on a computer in order to see the slides. And I do have information I will be sharing with you today. And if you have any questions at all, you can type those in there. You can type two different ways. You can type either in the Q&A box or in the chat box. And let's go ahead and check and make sure that you all can hear me and that you know how to ask questions. I won't be taking any specific questions today on scenarios. You can talk to your FAM account executive regarding any specifics on scenarios or guidelines, but we do want to be sure to get the information to you and make sure you know how to access the guides and contact your account executive. So I see some of you already posting in there. You've been on a webinar before. Let me know what part of the country you're calling in from. It is January, and that means weather across the United States is, well, who knows what it is. I am in the Pacific Northwest today. It is lovely here, kind of. It's raining just a little bit and cloudy, but I tell you what, across the country it has been cold. I was in Denver on Monday and Tuesday, and snow, drifting snow. And I was in Miami last week where it was also cold, but no snow. So, okay, you guys are logging in and can hear me, so I will move along. And then I also want to put up in the chat panel, if I can grab that in just a second, where you can access the information today. I will post it up here in the chat box, and then we'll also send out a reminder email to you. And then I'm recording this as well. So if there's somebody that didn't get onto the webinar that wanted to get on the webinar, we do have a recording that will be going out tomorrow, and we'll be sending that to you as well. So in the chat box, you can see I have posted up there a couple of links. One is to the program guidelines, and one is to our slide deck presentation. So with that, I'm going to introduce myself to you. My name is Ginger Bell. I'm an education specialist and work with Finance of America to help bring training and information to you. And so let's go ahead and get started. And I want to share with you this exciting new program. I'm super excited about this program because we have not had a program like this in a while. If you've been in the industry for a while, we did have opportunities way in the past to do a lot of first and seconds. This is a very exciting program, and we're excited to announce our To Extend fixed rate closed and second loan program as our newest addition to our FAM programs that are available to our wholesale clients. And you know, the past year has seen a tremendous increase in demand for second loan options. And so looking at current projections for this project, for this particular product, it will be one of the most popular products that you can offer to your clients. So what is 2X Extend? Well, 2X Extend is a fixed rate closed end second loan. And the great thing about this is it can be used in combination with a conventional conforming or high balance first mortgage. And so how you can help to use 2X Extend to help your borrowers is to avoid jumbo loan amounts. It can help you to avoid mortgage insurance. It will allow you, for many of your borrowers, to keep their monthly payments lower, as well as gain equity faster. The biggest thing, and especially for those of us in our jumbo loan amount areas, is it can keep your borrowers at a conforming or high balance loan limit, depending on where you're at, with the lower conventional rate. And you can add the 2X Extend for a loan amount of up to $500,000. Another big thing is it allows you to avoid mortgage insurance. So how it works, conventional first mortgage is at 80%. And then the 2X Extend reaches the maximum CLTV. And there's matrices that are available for that. You can see those matrices that are available in the guidelines. So if you have particular loan scenarios you're looking at, grab those guidelines out, call your Finance of America executive, and go through scenario. It also allows you to offer lower monthly payments to your borrowers. So instead of paying monthly MI, you can utilize the 2X Extend, which allows you to have a loan that can be fully amortized for up to 30 years, or have an interest-only payment option to decrease the total monthly payments. Also allows your borrowers to gain equity faster. The 2X Extend can be paid off early with no prepayment penalties. Great opportunity there. So let's get to know our 2X Extend program. And we're going to begin by talking about some of the available terms, loan amounts, number of units, as well as occupancy. So starting out with our available terms, it's available for a 10, 15, 20, or 30-year fully amortized loan. We also have coming soon a 30-year interest only. Yes, I said that, a 30-year interest only. Interest only is for the first 10 years and then fully amortizing over the remaining 20-year terms. That's huge, guys. Very exciting news. Let's talk about loan amounts. So the minimum loan amount on the second is $20,000. The maximum loan amount on the second is $500,000. Number of units, 1 to 4 units, PUDs, and Fannie Mae warrantable condos are eligible. Occupancy has to be a primary residence, but also could be a second home. So another great opportunity to be able to offer to your borrowers. So let's look at eligible states. We have here a map from across the country, and you see our light blue is where the 2X Extend is eligible. On the darker blue, which would be Texas, it's purchase only. And unfortunately right now, Colorado is ineligible. However, changes happen, so check with your FAM account executive to find out when that could become available in the state of Colorado and when you can have more than the purchase only. But hey, across the rest of the country, you are good to go. So let's talk about qualification, and that's an important area to look at. So our maximum CLTV is 95%. We need a minimum credit score of 680, and the maximum debt to income ratio is at 45%. When you're looking at additional qualification standards, it is eligible for first mortgages, and this is on the Fannie Mae conforming as well as the high balance loan limits. Eligible borrowers must be a U.S. citizen, permanent resident alien. First-time homebuyers are allowed, must be a primary residence, 1 unit. They also must have a prior rental history in the past 12 months. Another great thing about this is it does allow for living trusts, or your into vivo trusts. So if you have someone that has a trust, then they are eligible to be able to get the 2X Extend as well. So what kind of transactions are available under the 2X? So we have purchase, rate and term, and cash out refinances are available behind a FAM conventional conforming or high balance loan. In order to determine your LTV and CLTV on a cash out refinance, we're going to look at ownership. So if you're looking at ownership where they've owned the property for greater than or equal to 12 months, the value is going to be based off of the appraised value. If ownership has been less than 12 months, we are going to use the lesser of the purchase price or the appraised value. And again, that's to determine your LTV and your CLTV on a cash out refinance. All refinance transactions do require a continuity of obligation, and delayed financing is not permitted. Minimum credit score is 680. Trade line requirements, we need 3 trade lines. One of those trade lines must be reported for 24 months. All must be active in the last 12 months, and one minimum 2,500 high credit balance. Now we'll move on to liabilities. Looking at the fixed rate mortgage, which is fully amortizing, the qualifying payment on the first lien will be used. If you're looking at an ARM, then the initial fixed rate period, if we are looking at less than or equal to 5 years, the qualifying will be at the greater of the note rate plus 2% or the fully indexed rate. If for ARMs, the initial fixed rate period is, if it's greater than 5 years, we're going to use qualifying at the greater of the note rate or the fully indexed rate. Qualifying payment on the second lien, then you have the fixed rate, which is qualifying using the fully amortized fixed rate payment, and then the interest only qualifying using the fully amortized payment over 20 years. And so again, you can refer to the guideline matrix in order to be able to determine qualifying for both the first and the second payments. Liabilities. Oh, also remember on the liabilities, you have a maximum debt to income ratio of 45%. So let's talk about income. DU required on all loans. So your income that's documented per your DU findings and your Fannie Mae Seller's Guide will be used. And so you want to look for those DU findings to find out what that is, because DU is required on all loans. Looking at assets. For your purchase transaction, it does require that 5% of the borrower's must be their own funds. So 5% per purchase transaction, and it must be the borrower's own funds. Your reserves are determined by your DU findings. So you want to work with your FAM account executive and be able to talk to them about what those reserve requirements are as well. Appraisals. So a appraisal is required on all mortgages, obviously. So it is also appraisal review that is required. And so that's through the Clear Capital Collateral Desktop Analysis, or what's known as the CDA. And so for the CDA valuation, you're going to be looking at the appraised value, which is going to be used to determine the LTV. And there are some particular requirements on that, as far as depending on what your LTV is and what your CLTV is. And so you'll want to look at that in the guidelines to consider what that is. For the appraisal requirements, going to use the lower of the original appraised value, the CDA, and the field review, and that will be used to determine the LTV and the CLTV. So again, you're going to get a full appraisal as well as an appraisal review. It's important also to remember that any properties that are located in declining markets are not permitted. And so that declining market will be determined by the appraisal or any other third-party valuations. And so if you're in an area, then you're going to want to see if it is a declining area. And hopefully we don't have any of those areas right now throughout the areas that we're looking at. Okay, let's talk about title. A full ALTA title policy is required with expanded coverage, and that coverage is going to ensure both the first and the second liens. So if you're looking for additional information on this, then you want to contact your FAM account executive, who can go through your product guidelines. And the guidelines that I have put up here, and I'll make sure and put those up here again in your chat box, you can grab those. I'll send a follow-up email as well But the most important thing is to get together with your Finance of America account executive, go through any scenarios that you have. We also will have additional supporting material coming soon as far as marketing material, flyers, things like that, and you can find all information at FAMU. So I'm going to move over. It looks like we have a couple of questions coming in, and the first question is, must be first-time homebuyer or first-time homebuyers are allowed. And first-time homebuyers are allowed, and so there are some additional requirements for that. And I am going through my guidelines to see what all of those are. Greg, if you want to type in there for me any additional information you have as far as requirements for first-time homebuyers, that would be great. And then we have another question here. Where can you find current rates and did not see it on the rate sheet, and is the product available now? So if you are having questions regarding rates and where to find them, contact your account executive. And then rate sheets, going through it, it's on the last page of the rate sheet. So you can go through it there. And then again, you know, it's been a while, guys, since we've done first and second, so what I would really recommend is contact your Finance of America account executive, go through the rate sheet with them, and make sure you're pricing it out correctly, making sure that you're looking at your DU findings. That's the most important thing that you want to be looking at. And remember, too, on your purchase transactions, 5% is required, and that has to be the borrower's own funds. And so other standards, probably the biggest things you're going to look at this is your appraisal review. You want to remember that. There are requirements for your mortgage housing, 0 times 30 in the past 12 months for all of your properties. Anything you have as far as your DTI matrix, maximum is 45%, but you're going to be going off of the DU findings. A couple of other things, ineligible transactions. This is not a standalone second, so this is a combination first and second. Other ineligible transactions are land contracts, lease options to buy, contract for deed, construction, financing, and non-arm length transactions. As well as we're going to have a full tri-merge. Minimum credit score, again, is 680. We have minimum requirements on your trade line. Next question is lender paid or borrower paid? And so I don't have anything on that in the guidelines. I will refer to both. So Greg is answering me back. So yes, we can do both. And you can do either lender paid or borrower paid. And Kyle, you're putting in here, either it doesn't have to match the first. I'm not sure what you're meaning on that. And then we also have a question, is this product replacing the TCF second product? So I don't know that it is replacing that. So I'm hearing, so lender paid, so I'm going to go back. We're going to find out, is it replacing the TCF product? But going back to your lender paid and borrower paid, so you can actually do the first as a lender paid and the second as a borrower paid, which is great. So you can do one as lender paid, you can do the second as the borrower paid, and no, it is not replacing it. The TCF is a line of credit, whereas this is a fixed second. So good information. Question, can I prepare my own LE for both the first and the second? And that will be one thing you will want to get together with your Finance of America account executive to find out that. Joel, I'm assuming that you're wanting to know if you can prepare it on your initial LE, or are you a non-Dell? Is that what you're asking about? So Greg, the question is, can I prepare my own LE for both the first and the second? And so we'll get that information back to you on that, Joel. You might want to check with your account executive and find out the answer for that. And I have a question here. Are the lender paid commissions on a second the same as the first mortgage? Okay, so let me look up that. Are the lender paid commissions on a second the same as the first mortgage? So I'll look into that. Hal, I got your question there. And then Joel's asking, can I prepare the initial LE? And we are checking into that, Joel, to see if you can. So we might need to get back with you on that. And then Joel has another question. Is there a fee for the appraisal review that is passed on to the borrower? Yeah, so I'm assuming that there is a fee for the appraisal review. And so we will have to see how that gets priced out. Oh, it's not. So Joel, good news. That is, the CDA is actually covered by FAM. Thank you, Kyle, for that. And on your comp plan, so the question was, is the comp plan the same on both if both are locked as lender paid? So are you paid the same on both? The answer is, and I'm looking this up real quick. So broker, LE, okay, so yes, I'm sorry, I'm reading through all of this. So the comp plan is the same for both, which is great news. You can actually be paid on a second. So you get paid the first and the second. You can combine both lender paid and borrower paid, and the comp plan is the same on both. And the broker LE is allowed on both the first and the second. So you can do the initial LE on both the first and the second. I have a question. Do we need a separate license? I'm not sure, James, what you mean by that. Do we need a separate license? Let me know a little bit more information on what that question is. And I'm seeing some of you raising your hand during the webinar, so unfortunately I can't unmute you. So if you have a question, go ahead and type it in. I'm monitoring 2 different panels right now I'm looking at, so you can type a question in the Q&A panel or in the chat panel, and I'm seeing both of those. So James, you had asked, do we need a separate license? If you want to expand on that a little bit, let me know. If not, you can contact your FAM account executive. Okay, so James has a little bit more. I was told that in order to originate a second lien, we require a separate license. I am not aware of a separate license or where that would actually come from. So I don't know about that. Yeah, it looks like there's no other license that's needed for what I'm seeing. Ron is asking, did you say maximum cash out is 95% LTV, CLTV? No, I said the maximum CLTV is 95%. So there are metrics to your cash out depending on what your loan amount is. So if you're looking at a 1-unit property for cash out, your combined loan amount of $1.5 million, then you're at a CLTV of 95%, but you need a minimum FICO of 720 and a maximum debt to income ratio of 35%. And then it goes up from there. So what I would recommend if you're having questions as far as your maximum, especially on your cash out, then look to your matrix, and I've sent a link for that, and I'm going to be sending a follow-up link as well. So I would look to that to find out what those qualifications are, because what I went through is very general standard. Minimum credit score is 680 unless you're doing a cash out. And without having to go through each of these items line item by line item, you can just refer to the guidelines. And again, if you have any questions, contact your Finance of America account executive, and they can go to the matrix. They can help you price those out. They can help you talk about ways to market this, because really this is a great opportunity for you to use this as, what I love, edgy marketing, being able to get this out to your database. So I would definitely recommend doing that as well. And Morgan's asking, is this available to non-Dell clients? No, this is a brokered product, so you must broker this. Okay, so it looks like the licensing may be a Nevada requirement. So James, I would definitely check into that. And Greg, we may want to look into that as well. It looks like there may be a Nevada requirement for a second mortgage. So I would definitely look into that. And James, thanks for the heads up on that. It's funny when you get back into products that you haven't done for a while, these are the kind of things that you have to look into. So Greg's going to check into that, check with your account executive. Let's see, David's asking, you mentioned a minimum revolving amount of $2,500. Was that there has to be a balance of that amount, or a minimum credit limit on the revolving debt? And that's a good question on that. Let me look through the guides, and that might be one that you'll have to get together with your FAM account executive for an answer on that, because I am trying to find that out. Oh, a high credit limit I'm seeing. Okay. So it looks like it's the high credit limit, or the credit limit. Brennan, let me know what you mean by that. So I apologize for the fragments on this. I'm trying to get through all the questions, and I have two different question panels here that I'm looking at, and then trying to get through guidelines. And the question, does FAM prepared LE send out a separate LE for the second, or can they be combined onto one LE to be acknowledged by the borrowers? Great question, Hal, because obviously in our world of compliance, it will be separate. So two different LEs. And really when you think about that, and thank you, Kyle, for that, two different transactions. So both are subject to TRID, exactly. So you're going to have two different transactions, two different LEs. And so those are the kind of things you want to talk to your borrowers about. And that's the conversation that you have when you're going through this, to let them know they're going to get the two separate LEs, and explaining both of those as well. And then I have a question, if you're paying off an existing second with the second, would that be considered cash out? And yes, that would be considered cash out. So that's one of those things, if they already have an existing second, it would be considered cash out. Okay, and Greg's saying unless the second is being paid off is purchase money. That gets into a scenario thing. You're going to follow the Fannie rules, so follow the guidelines. And if it was a purchase money second, then possibly. So that sounds like a great scenario to be able to talk to your FAM account executive, and then probably run it through DU and find out what that looks like. Okay, so I think that is all I see for questions for now. And so just a little bit of a recap. So pricing you're going to see on the last page of the rate sheet. Your product guidelines, contact your FAM account executive to find out where those are at. If you didn't pick it up, I'm going to put it back up here again on the chat box so you can grab it there. And then there's a copy of the slide deck here as well. If you do have any additional questions, please contact your Finance of America account executive. And coming over the next 30 days or so, we're going to have some marketing material available for you. So some flyers, things to be able to go out and promote this. And we do have a recording of this that I'm doing right now. We will put that up at FAMU, and then we'll also send a link which you'll get by email through the Zoom platform, which you're attending right now, but I'll send a follow-up email tomorrow. And then look for the recording on FAMU. So if you don't have a login to FAMU, you can contact your FAM account executive and get a login for that. We have a lot of training that's available on FAMU. We record all of our webinars and put all of our webinars up there. There's also great training on FHA, on VA, on 203K. So if you haven't gotten on there, get on there because it's a great resource for you right now. And so, James, it looks like I got an answer back on the separate license, and there's no separate license for Nevada. So it looks like you are good to go, my friend. Any other questions? Pop them up right now. I'll stay on here for another second. Otherwise, contact your FAM account executive. And I want to thank everyone for attending. And we look forward to having your loans come in. Get the word out there. Let your partners know. Let your realtors know. Send an email out to your database, because there may be people that are looking to do a refinance and don't know that this is available. So this is an opportunity for you to be able to get that out there and to use this to be able to market yourself. So I want to thank all of you for attending, and we look forward to seeing you on an upcoming webinar. So take care and have a great week.